The subcommittee has convened today for a hearing entitled How Mandates Like ESG Distort Markets and Drive Up Costs for Housing and Insurance. This hearing is part of the committee's continuing work this month to investigate the far-reaching impacts of a new trend in the financial services world: forced government ESG mandates. For those who are not familiar with it, ESG is the latest progressive buzzword for environmental, social governance factors. ESG is a form of virtual signaling where companies can proclaim how enlightened they are based on their environmental, social, or corporate governance actions, even if they have to ignore their fiduciary duty to their stakeholders or decrease the value of their goods and services to consumers. Those that give into ESG movement think that it will make their company more popular with progressive agitators and investment companies. Those that don't give in are pilloried and protested for having the audacity to focus their business on their business. Essentially, ESG is in many cases a modern shakedown tool brought to you by today's cancel culture. Now, some might say, what's wrong with a company becoming more involved in environmental, social, or corporate governance issues and telling their customers about its values? The problem becomes when ESG is not being offered as a choice, but as a mandate. ESG mandates, like so many other government mandates before it, are always offered up as harmless tweaks on the path towards social enlightenment, free from cost or ill intent. That will make the markets work better. Of course, the reality is the exact opposite. Mandates like ESG distort markets, drive up costs of products, reduce consumer options, create scarcity, and misalign investment capital. Made-up metrics like ESG scorecards are created to determine which companies are in the good graces of left-wing activists. These modern-day social credit systems drive a wedge within open markets by directing investments to companies that satisfy progressive demands. Your company's access to capital should not be dependent on being more woke than your competitors. The far left shouldn't be able to cancel your business because you don't comply. ESG scores and mandates create social credit system that makes life harder for American consumers, businesses, and retirees with little or no discernible benefits. So today's hearing will explore the impact of growing ESG movement on two different industries, housing and insurance, and what it means to the consumers. Because ultimately, that's the job of government regulators, to protect customers from collusion and from fair practicing.